little circles stop spinning, there will be recording. So probably 3, 2, 1. All right. Good afternoon, everyone. Today is Monday, January 30th, 2012. It is the next to last day of January. We are going to go over the trades that we took this morning in the live trading room. We took 2 trades. In the time period that we're in the live trading room this morning, we had a pretty tight range. It was 7-point range for the whole morning. And most of the morning session was only about a 4-point range. Just toward the end of the session right here, you can see the last half hour or so, we put in a couple more points in there. But most of the morning session was just from right here, 1306, I believe. Oh, that's even being generous. 175, 1302 we'll call it, down to 1296. So that's a 6-point range right there. But we were stuck right here for a while. All right, the trades that I took this morning, guys, you see them. They have the yellow arrows. I have the rules for the trades in here. I'm sorry I keep scrolling all over the place on you. These, you know what, I'm just going to blow this up. These are the rules right here. Okay, these are the rules right here for the 4-tick range trades. All right, now what we look for, number 1, get a lower swing, higher or lower swing. We're going short, so we're looking for a lower swing pivot, which is right here. BBC, which is the green line outside the box. The box is either below the red dotted lines or above the blue dotted lines. All right, this area right in here is the box. You can see over here when you're going short, it's below the red, and when you're going long, it's above the blue. Get a fresh bubble on the chop bands. That's these red lines outside the black lines down here on the 4-tick range, okay? So we got that, fresh bubble. And then a pull back to the BBC that is clean, that has no... If you're going short, it doesn't have any higher low pivots, which would be like right here, okay? Sure, Jack. I'll send it to you. You become a partner, my friend, and I will email everything to you. I do have it as text somewhere else too, so I can put it in the box and send it to you as well. Okay. All right. Let's see. So over here, I know you are. So over here, we waited for the pullback up here to the BBC. We got short. Step number 5 says enter with an MIT order rounding the BBC up or down to the nearest tick. In this case, we rounded it down to 99.75. It hit 99.75, triggered us in at 99.5. Once we had a point in the trade, we moved our stop up to break even. It came right here and stopped us out at break even. Then it went down here. It didn't go to the target here. Our target was 2 points. It went within a tick of our 2-point target right here, but it didn't hit the 2 points. It pulled back up here, hit the weekly trading zone, bounced off that, and then went down to our target. Now we had a 2-point bracket around this trade, so our stop would have been up here at 1301 half, right? Because we got entered in at 99 half, so our stop would have been at 1301 half. So we would have stayed in the trade had we not moved our stop up to break even. That's neither here nor there at this point. What we did do is we got a lower swing pivot. The trade was followed up by another short trade. Okay, we got a lower swing pivot right here. We had a 2-point bracket on this. Again, I triggered in here at 1298.75. Is that right? No, I had my order at 1298.75. I triggered in at 1298 half. Price ran up to 1300 half. I didn't stop out there because I had my stop actually. There was a tick of slip, so my stop was at 1375, not at 1300 half. I ended up taking 1 point out of the trade down here. It did continue on down to go to the 2-point profit target, which was 96 half, right down here. Okay, I had taken my point over here because the market was really in a tight range, and it didn't seem like it was going to have any follow-through. And it really didn't have any follow-through. I mean, it went to the profit target, but only 2 ticks beyond it. Then it turned around, it came back up here. We didn't have any trades in here. There were no trades able. I mean, there was no way for us to take any trades in here. Up until, even right here, we need a fresh bubble. All right, because this bubble that we had right here was good for this pullback to the BBC right here. All right, but that BBC was not a valid not a valid trade because we had a double top right there. All right, so we didn't have a clean pullback down to the BBC. The double top disqualified that, and it's right inside the weekly trading zone. This would have been good had we had a fresh bubble. This would have been a good long trade, but it wasn't. So we got plus 1 point over there, and that was actually the morning session. We had plus a point with 6 contracts, plus 24 ticks on the ES. Okay, that's what we got. If we look over here on the other time frames, we had similar action over here. I have the rules in here for these. This is on the 10,000 contract. These are the rules. Cross of the BBC, you want to have a bullish cross or a bearish cross of the BBC by the MA1. You get a pullback to the BBC. The first pullback is the one that I prefer. After the price has moved away from the BBC, I'll show you an example of that. It would be right here. This is a bullish cross. Price moved away and pulled back. Okay, the cycle should be headed down for shorts and up for longs. The cycle was headed up over here. It was overbought. I don't like that so much. And then there were a couple other things going on. One, it was going right into resistance, and it was going into a weekly trading zone. So I didn't take this trade right here. Okay, the 2100 probably looked very similar to that. I don't think I put my rules on the 2100 chart this morning yet. I didn't. Okay, now the 2100 had a trade earlier on this morning, prior to the open. It had a trade right over here where we had the bearish cross. The rules are very similar to the rules here on the 10K, except with the 2100, the added criteria is that the cycle be below the 50 for a short or above the 50 for a long. It dropped through here, pulled back up here. This would have been the entry right here at the weekly trading zone at 1313, looking for 5 points. That one did drop down significantly. All right. Let's see. That's it for that one. Now let's look over here at the YM. All right. There was a trade on the YM this morning. I'll blow this one up too, so you can have a look at it. All right. Here we go. All right. Now the YM this morning, similar setup. These are the rules right here. Cross of the BBC by the MA1, a pullback to the BBC after price is pulled away from it. I prefer the first pullback again after the price has moved away from the BBC. The window of opportunity is the area between the BBC and the MA1. In this case right here, we had a bearish cross this morning. Price pulled back up to the BBC. The entry would have been right in here. The window of opportunity was between the BBC and the MA1. At the time of entry, the BBC was red, so when it's red like that, you anticipate it going through the you don't anticipate it going through the MA1. I think I just said that backwards. Let me say it again. At the time of the entry, the MA1 was red, and when the MA1 is red, when you enter at the BBC, you anticipate price going through the MA1. That is what happened here. I didn't actually take this trade. I was doing something else with the ES or something. I didn't actually take this trade. Actually, yeah, I was short on the ES at the time that this was going on. Then price moved down at least 20 ticks to the profit target if you would have taken that. All right. After that had happened, I had drawn this trend line here. I think I had drawn it when it was more along right here. And you can see price followed it up pretty well up until right here at the zone. Then it pulled back to the BBC again and moved up. But you can see here we had the bullish cross, then pull back to the BBC. That one didn't go all the way to the BBC. Uh-oh. That one didn't go all the way to the BBC. But it pulled back right here. The first pullback didn't go all the way. The second pullback did. Okay? The third pullback did again, but it was going into the zone, so I didn't take any of those trades. That is the ES and the YM. Now let me bring something else over here. Here's the 6E. Now, this morning there were, some of the partners in the room this morning went over the 6E trades trade by trade. One of them did it for the 27th. One of them did it for this morning, for the first 4 hours this morning, or 4.5 hours this morning. The first 4.5 hours this morning netted, I think, 19 6E ticks, but I'm not sure what bracket he was using for that. George, if you're in here, you can type that in. But one of the other partners did it for the 27th, and if you traded bell to bell on the 27th, he had come up with plus $1,900 at the end of it all, excluding commissions. All right. Now that's based on something that we went over in the partners meeting last week. All right, this is the 6E. Now what we were looking for in the partners meeting last week, on the combo, you see there's one less line showing here on the combo. All right, George's bracket was a 10 by 10. Thanks, George. You see there's one less line here on the combo, and basically what we're looking for is it to reach one of the extremes, then roll over. And roll over before the green one does. All right. Be on the opposite side of the green one, going up and down and up and down. Look for price to close on the other side of the MA1 and get into the trade that way. George said he did it this morning, the first 4.5 hours this morning, based on a 10-tick bracket. If he used a 10-tick bracket this morning, he had said I think there were 18 trades. Is that right, George? 18 trades and plus 19 ticks is what it ended up being. There were 54 positive ticks and 35 negative ticks, I think is what it was. Something like that. Just doing it from memory here. 12 trades. Okay, 12 trades. He took 12 trades plus 19 ticks. Okay. All right. That was the 6E. Now I want to show a couple other things. That was the 6E on the 500 contract, okay? I want to show the Russell. Just really quick. I just want to show everybody in here all the different, well, not all the different markets, but a bunch of different markets. So you see the potential if you like to trade markets other than the YM and the ES. Let me just push this out a little bit. All right. Now with the Russell, similar trade setup as I just showed you on the 6E. You're looking for price, these lines right here to reach an extreme, either up or down. Once they do, you look for a close on the other side of the MA1. You enter at that point and write it down. We had a partner this morning that took 14 ticks on this trade, and I don't know how many other trades, James. If you're in here right now, I don't know how many other trades you participated in, but I know you trade crude with this as well. But it's really straightforward and simple. It's what you wish all the stock indicators would be. But here it is right here. I mean, you're looking to trade when it turns down. You get in when it turns down. You get in when it turns up. It's as simple as that. Okay. Your risk is below the swing pivot right before you got in. All right, right before you're looking to get in. Okay. And you can trail your stop down behind the MA1. It's as simple as that. All right. That was on the Russell. Now let me just change this to a 6B really quick. Okay. I'm going to leave the same indicators on there and everything. I'm just going to change the actual symbol. I'm going to change it to a different time frame too, though. Okay. I'm going to flip it over to a 4-tick range time frame. We do zones for the British pound as well. That's why I wanted to show this morning. Ted, are you in here right now? I'm just looking. All right, we keep getting all these notices about expirations. Nope, Ted's not in here. Tom is in here, though. In this particular case, you'd be looking for the same thing, white to turn down, price to close below the MA1, and for price to move. All right, this is the pound if you like to trade the pound. Moving up. See it? Moving down. Right here, moving up, right here. Didn't move down far, but it moved down a few ticks. Right here, moving up. Now, when you look at this, it's 156.56 up to 156.66. Now, this is the 6B. The 6B per tick is half what the euro is. So that was what, 10 ticks, which would normally be $125 on the euro. On this, it's 67.50, I believe. If I'm doing that right in my head. That's what you would be gaining in that one particular trade, anyway. In the larger trades, you gain more than that. But that's the 6B. Let's see, what are the markets? Gold. You can do gold and soybeans and all those. But it basically works the same way. At the end of the morning session, we had taken These two trades on the ES for plus 24 ticks. Okay, that's what we did in the live trading room. We showed these other markets in the live trading room, at least some of them. And what I wanted to show to everyone in here and in the recap was that it can be, what we're doing in here on the YM and on the ES can be extrapolated out to other markets pretty easily. All right. If nobody has any questions, then I am going to stop the recording here. I've actually been yapping for quite a while. David's hanging out. I would recommend everybody go to the link that Dwayne just put in there. It says, follow us here, Seeking Alpha, author Dwayne, Stock Talk. Go there, check it out. If you have any comments, post them. Okay. All right. And that is it. All right, I'm going to wrap it up.